Well, let's go to the management of MTAR Tech. The stock is lower on account of weak numbers, but more than that, the guidance that the company is cut from 860 crores on the top line to close to around 670 odd crores as well. And for the margins as well, they've cut it from 28% to around 26%. We have with us the director and the promoter, Parvat Srinivas Reddy. Thanks a lot, sir, for joining in. First up, wish you and your family the season's greetings, festivities. But talking about the numbers itself, you've scaled down your revenue guidance. Is it temporary in nature? Do you believe that you can make up for this lost revenue? And even the margins, when do you go back to the normalized 28% mark that you've earlier promised?
See, the first thing is the deferment of revenues has happened because of the technology change, the change in the model, what we're doing for the Bloom Energy from the earlier Yuma to Santa Cruz Block 2, which generates a higher output, power output from 50 kilowatts to 65 kilowatts, which is a great thing. And the transition phase is happening right now. And we see the deferment primarily happening because of that. And it's got nothing to do with the demand as such. So that's the main reason why we have indicated that there is a reduction of 160 crores of revenues being deferred to the next fiscal, because we need to ramp up to the new model, which gives a better, higher power generation output, which is great actually, and we have achieved that. But the ramp up also has to happen, which will happen over the next 2 quarters.
Okay, so 160 crores is what you expect to be realized in FY25 itself?
Yes, that's right. So whatever is being deferred will definitely get realized. So we have the orders on hand. It's only the deferment of revenues because we need to genuinely ramp up to the new model, what we have done along with Bloom. That's the main reason, and there's no other reason behind.
Okay, so your order book is around 1,000 crore rupees as on 30th September. What is the order inflow for the rest of the year that you're planning? And in terms of that, what will the split look like? Where will it come from the most?
See, as I mentioned earlier, our closing order book will be close to about 1,400, or it can even touch 1,500 crores, primarily coming from the nuclear sector, space, and the clean energy sector as such. So there is no change in plans or the kind of interest we are getting in terms of the orders that we are receiving. And I've clearly said in second half, we'll have a very sizable orders coming in from various sectors that we have envisaged for.
So could you quantify those orders which are expected in the second half of this year? And like you said, this 160 crores will be deferred into the next year. Could you give us a sense of, along with this 160 crore, what the revenue guidance for FY25 will look like?
I would rather give that a little later, by end of by probably next quarter. I would like to evaluate the entire thing. But the orders which will come in is from the nuclear sector. Majority of them is about 500 crores. And the rest would come from the clean energy and the defense and the space sectors as such.
Okay. So when I just wanted to understand the raw material sourcing and working capital situation as well. There's been an increase in receivables, but the payables have come down, inventory levels have come down. Can you tell us what the supply side situation is looking like and what is the final working capital target that you have? Because even your operating cash flows have become, they were negative, but that number is also increased in that regard.
See, one thing we should understand is that we have the inventories already, the raw materials have already been received with respect to various orders. Since there has been a deferment in shipment plans, we already have the inventories with us and we will utilize them over the next 2 quarters. And we are forced to, obviously, the payables have to be cleared based on the due dates, respective due dates. We can't defer that. But moving forward, we will definitely, the inventories will come down. Since we have the required inventories for the next 2 quarters as well, and that will improve our working capital cycle as well. So we are focusing on that issue more and more, and we should come back to normalcy by end of the year.
And this margin cut is also on account of deferment of orders itself, right? That is not to do with anything else.
Absolutely, yes.
Perfect. Thanks a lot, Mr. Parvat Srinivas Reddy, for joining in and giving us those details. As of now, the street does not like the deferment of these orders. The stock is lower, but as the management has said that they will make up for this in FY25 itself. Take a short break. Come